everyone, and welcome to another episode of my weekend market analysis series. In preparation for the upcoming week, we will be focusing on the XAUUSD chart again, aiming to understand the market sentiment through the lens of fundamental and price action analysis. As you will see on your screen right now, this was actually our trading setup prior to the beginning of last week's trading session, where we had price action somewhere within that demand zone, just right below the $2,400 area, which was serving as our key level for last week. And of course, during the midweek, we saw how gold prices fell significantly, resulting in a 3.1% decline, all the way from that 2,431 zone. However, on Friday, we saw signs of recovery driven by optimism for a potential interest rate uh, cut by the Federal Reserve in September. And of course, this optimism emerged after data revealed a modest rise in US prices in June. And as a result of this development, the market closed the week at approximately break even. As you will see, price action was back into that area where it started last week's trading session. And for educational purposes, if you really want to have a deep insight into a detailed breakdown of each of our entry points, you can find this right in the description box of this current video. So at this point in time, if you look at our daily time frame, this was even from last week trading setup. The recent decline from the all-time high at the 2,484 zone could be interpreted as a correction of that impulsive leg that started about a month ago. The price is likely to defend its current level if the Federal Reserve hints at a interest rate cut during their next week's FOMC meeting. We may likely see an uptrend from this area or even dropping down into the structure to incite an uptrend move. In preparation for next week, and of course in this video, we are going to be taking a fresh look at the market, where we will be delving into the charts to analyze what the market is indicating and how to anticipate next week's trading activity. We will consider various components as always, including a technical analysis overview to identify the major trend, key levels for the coming week, and structural patterns to guide our independent trading decisions. Before we begin, please note that this presentation is purely for educational purposes and should not be considered financial advice. Forex trading involves inherent risk, so proceed with caution and always seek advice from a qualified financial advisor before making any investment decisions. With that said, let's dive right into the business. So as always, our first point of contact will be right here on the daily time frame. And of course, for a while, for those of you who have been with me for a while, this structure still remains the same, except for some little bit of twist into the current market dynamics. Now, after we consider the character of price action since the month of September of last year, it's quite obvious that the market has been on a strong bullish momentum. And of course, when we connected the series of higher lows, we have a couple of ascending trend line, which obviously has been supporting our buying ideas during the course of this time frame. Now, zooming into the current structure, you will see that price action has been within an all-time area, let me say an uncharted territory, where we have noticed a consolidation between the 2,300 and the new high at the 2,400 484 area to further emphasize the level of uncertainty in this market at this point. Now, to help us navigate this current market dynamics ahead of next week, we have our new key level for the week sitting at the $2,390 area. And of course, you do know how we use our key levels. As long as price remains below the key level, we want to be looking out for patterns and structures that support the idea of selling, and we will not consider buying unless price breaks above the key level, except for rare cases where we see some significant development that suggests buyers are getting stronger. Now, with this whole situation at this point, and considering the fact that price action is back into that key level, what are the chances that buyers or sellers will come into play next week? Are we going to be seeing a situation where price will climb back above the 2,390, which is basically above that ascending trend line, to continue the uptrend move? Or are we going to see price retrace back into that demand zone between the $2,265 area and the 2,300 in an attempt to continue the uptrend continuation? So, to navigate this current market dynamics, you know how we do it. We have a simple trading setup on the 4 hours time frame, which will be helping us to navigate this current structure. But before we delve into the 4 hours time frame, it is time to pay attention to upcoming economic events that will influence market sentiment next week. And of course, by checking the economic calendar, um, we can identify how upcoming events might affect price action. This, of course, helps us to spot potential correlations between key economic releases and specific technical patterns on the chart, allowing us to time our positioning more effectively. Now, looking at the economic calendar and based on the assets we are looking at for this week, we are going to be focusing on high impactful event from the United States economic docket. Now, the first high impactful event will not be coming until Wednesday, July 31st, and that is the ADP employment change, which is a monthly economic report that provides an estimate of the change in non-farm private employment in the United States. And a positive ADP figures indicates job growth, which will boost market sentiment as they suggest a healthier labor market. Then we also have the Fed interest rate decision, which is the outcome of the Federal Reserve meeting where they decide whether to change or maintain the current interest rate. And this is coming up much more later in the day on Wednesday. Then we also have the Fed monetary policy statement, and of course the FOMC press conference, an event where the Fed chairman will communicate the central bank's monetary policy decisions, economic outlook, and of course answer questions from the media. Then fast forward to Thursday, August 1st, we are going to be looking at the ISM manufacturing PMI, a leading economic indicator in the United States, measuring the health of the manufacturing sector by surveying purchasing managers on various business activity. Then on Friday, we will be looking forward to the labor oriented data, one of which is the average hourly earnings, which represents the average amount earned per hour by private sector employees in the United States. And is also considered to be a crucial labor market indicator. Then finally, we are going to be looking forward to the almighty non-farm payroll, one of the major highlights for next week, a key economic indicator that measures the number of jobs added or lost in the economy. And this, of course, excludes the farming sector. Now, it is usually believed that a strong NFP report typically strengthens the US dollar as it suggests economic growth and can influence Federal Reserve interest rate decision, while a weak report can weaken the US dollar. So these are the event we are going to be looking forward to, and of course the anticipation of this event has a way of influencing the sentiment in the market. Now, scaling down into the 4 hours time frame, after taking into consideration the character of price action since the beginning of the week, we have a very simple trading setup to help us navigate this market dynamic. Now, right here on the 4 hours time frame, you can see it is quite a simple one. The first thing you will notice here is a descending channel, which obviously buttresses the strength of the sellers. You can see connecting the series of lower highs, we have the resistant line of the descending channel, and when we connect the series of lower lows, we have the support line of that descending channel. And within this descending channel, price action has stayed consistent, and in fact you will see that price is right below our key level at the 2390. And one interesting thing about our key level is how beautifully it shares a confluence with the resistant line of that descending channel. Now, the most important question to we want to be answering this coming week is whether or not price action will respect this confluence. Maybe we are going to be seeing a reversal setup or a form of selling pressure below the structure, respecting the resistant line one more time to incite a downtrend move, or how we're going to be seeing price break out both the key level and the resistant line to incite buying opportunities. So you can see we are at a crucial juncture right now where, depending on how market participant reacts to the structure, will determine what our next course of action will be. But trust me, I will be with you in the comment section of this video on Monday morning after monitoring the character of price action around this area to give you my idea on what I think is going to happen based on the structural formation of pattern that we see around that area. If you have found this video useful for your independent trading decision this week, I will be glad if you could hit the thumbs up button. Your support not only means a lot to me, but also helps the video reach more traders who might benefit from the content. Thank you in advance for doing so. If you haven't already, make sure to subscribe to the channel for more insights and updates. By subscribing, you'll stay informed about my latest videos and commentaries, and you will be the first to know when new contents drop. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.